Glad to know you're still with us. Sub-Saharan Africa is on the cusp of a transformative energy revolution. A new study by Wood Mackenzie reveals a staggering $193 billion investment opportunity in renewable energy and transmission by 2031. This is a region where nearly half the population lives without electricity, and the potential returns are significantly higher than those in mature markets like Europe and the US. What are the challenges and what solutions are there? Ikechukwu Odoh, Senior Manager, Energy and Natural Resources, KPMG Nigeria, joins me for more on this. Thank you for joining me today.
Thank you, Perpetua. Thank you very much for having me.
Okay, I'm not sure I heard you.
Thank you. I said thank you for having me.
Okay, all right. All right. Now, Sub-Saharan Africa offers a $193 billion opportunity in renewable energy and transmission. Now, talk to me, what resources, minerals, or even value chains are we looking at here?
Okay. Thank you very much, Perpetua. We're looking at the McKinsey report didn't actually tell us something new. You know, it's something that we've all been aware of, the potential opportunities, especially because of the energy deficit that we have in the Sub-Saharan Africa, especially with Nigeria. So the report sort of buttresses something that we've all known for a very long time now. Specifically, you're talking about what resources are we looking at? We have the solar, the wind, and all the other renewable energy sources, and the value chain is massive. And currently, Nigeria doesn't have we import most of the things we do. So if you're looking at the value chain to contribute to renewable energy development and within the Sub-Saharan Africa, and especially with Nigeria, you're talking about integrating a backward integration to be able to deal with infrastructures that help you to design and develop and do all those things. So manufacturing all those aspects, the panels, the storage capacities is very key. So I think that if you look across the value chain for the renewable energy sector, then it buttresses what the McKinsey report is talking about, which is the value of potential opportunities in terms of economic benefit that it can unlock. And I think that it's something we've known for a very long time now.
Well, there is something significant about this particular report. I would like you to talk to us about, beg your pardon, the factors that contribute to the higher internal rate of return. I mean, you talked about 15% to 21% compared to 5% in other climes, you know, for renewable energy projects in Sub-Saharan Africa. Talk to us about this. I mean, what factors are contributing to this yield?
Okay, thanks. You know, when you talk about internal rate of return, you're talking about baseline return from an investment. Yes, and there are a lot of factors that contribute, and high on top of the list of these factors is the risk factor. So the baseline, if you're looking at the rate baseline, which is the rate of return, the cash flow coming from that activity, you would see that because of you talked about the number of people in Sub-Saharan Africa, especially in Nigeria, said 600 million people are without access to electricity. If you bring it home and come down to Nigeria, you're talking about 85%, of which 80%, about 43 million people, of which 80% of them are in the rural areas. And then when you look at that number and you look at deploying a solution to address that energy deficit or energy gap, the cash flow that comes from it's quite significant if you're able to harness that potential. So you're looking at the IRR to say 15 to 21%, especially for the Sub-Saharan Africa, compared to other aspects of Europe or US where the margin is about 5%, according to the report. So you see that, yes, all these other factors, the risk factor I talked about, because the higher the risk in making an investment, the higher also the internal rate of return. So as expected, if you're going to invest in a high-risk venture, then the yield from that venture needs to be commensurate in order to incentivize people to come into it. You know, so those are some of the other things that contribute, apart from the risk factor, the rate of return, the cash flow coming from investing in the renewable energy sector within the Sub-Saharan Africa is also a very huge, because of the number and the population, is quite huge. And that also contributes to the IRR, as you can see.
Well, one thing we know in investment is that the higher the risk, the higher the return. So
exactly.
now with 15 to 21% yield, which is significantly above the cost of capital and yields on sovereign bonds, I mean, my next question to you would be, what are the main barriers preventing a more rapid influx of capital? You've talked about risks, and I suppose that that in itself should be a reason for people to want to come because the yield will actually be more. So what's preventing this influx that we should be having?
Okay, thanks. While the rate of return or the yield from an investment is one of the key parameters for assessing the viability of an investment decision, it's not the only decision. And there are other things that could impact whether an investor wants to come into a certain region to make investments. I will talk locally, focus on Nigeria. There are specific issues. Some of them are things we've been grappling with for some time now. The issue of insufficient infrastructure. So we have an infrastructural deficit. So the question is, if I make this investment, am I going to focus on micro grids and mini grids, or do I have access to the national grid so that whatever I generate is transmitted to the national grid? So that's a big question, and that may also impact people who want to make investments. Another option, another consideration would also be the security factor. Where am I going to base my site, my production site, my electricity production site? Are there the security concerns? Will there be vandalism? Will there be all that? And some other things. So these are some other non-quantitative factors other than the yield that some investors tend to look at when making investment decisions. So it's not just only the yield, because if it's just the yield, then there'll be more of this in country. In any case, I wouldn't argue that there are no influx of resources, into Nigeria, especially within the renewable energy space, because we've seen last year the World Bank invested some money in the Nigeria electrification project, and based on the success of that project, they've also earmarked about $750 million for the DES scheme. Right? So it's like a follow-up on the Nigerian electrification project. So I wouldn't say that completely that investment that they're talking about are not being attracted within the sector. Because again, there's a need for it. There's a
we're talking about Africa
in
general now, not just Nigeria.
Yes.
So you just give an example of Nigeria and probably some of the countries that are also doing well in that regard. Please go ahead.
Well, I can't speak for, I'm not an expert with all the other African countries, but at least I'm familiar with the investments that are coming to Nigeria, especially through the Rural Electrification Agency and the investment that the World Bank has done in terms of improving access to electricity, especially at the rural areas and the underserved regions within the urban areas.
Interesting. So talking about these risks, isn't there a way we can sort of mitigate them? Can they be mitigated?
Sorry, I didn't get that.
As I'm talking about the risks, which you already mentioned, isn't there a way that investors can actually mitigate them?
Of course. I think that it will be remiss of me to say that the government is not doing so, or are not aware of these issues and are not doing something about it. We could see some significant improvements by the government in certain areas, especially around regulations and policies, and putting in even investments. If you look at the 2024 budget, the allocation to about 19 billion allocated to other renewable energy, to completion of renewable energy projects, all the Nigerian electrification, rural electrification projects that were ongoing. You could also see significantly the enactment of the Electricity Act, where we have to harmonize all the laws and regulations that deal with electricity in Nigeria, or electricity production, generation, transmission in Nigeria. And also in integrating other means to help us to scale up our energy production. We saw within the Act the decentralization provision, the revamping of the Rural Electrification Fund, and some other aspects that help to address some of the issues or challenges that we're seeing. The issue of insecurity is ongoing. There are conversations at the federal level, at the state, even at the local level, to see how government and the people in general could address this. So that is not something that happens overnight. But for the other ones that are related to regulatory and policy, we've seen significant strides being made in that regard.
Well, isn't it ironic that almost 600 million people in the region, of course, you talked about that earlier, or about half the population in Africa have no access to electricity, while the region has a lot of untapped and underdeveloped resources. I'd like you to, explicitly talk to us now about the potential opportunities in Africa.
Okay, I mean, you've said it. The numbers are staggering. The McKinsey report also puts perspective to, it focuses mostly on the renewable energy aspect of it to say, if we harness the wind, the sun, and the hydro, there's a potential of about $127 billion. And then it comes to the transmission, and then it talks about the transmission and the micro and mini grids, where there's another potential of about 66 billion. Now, this is the first time or one of the first reports where there are numbers attached to that kind of opportunity. Sub-Saharan Africa, with the population, we're talking about 600 million people in Africa. And then you're saying that, again, I come down to Nigeria. You look at the population of Nigeria that are without access to grid electricity, where some players are doing, so there's an opportunity there for players within the micro and mini grid space to go into, right? And then tap into that. Again, you have options. I think that the most basic thing is that a number makes it a huge market for us because we have that number to be able to attract and scale any investment. That's one of the opportunities. The second one is you look at the abundance of the resources that we're talking about. Africa, possesses an abundance and, like you said, untapped resources, and these are renewable resources. We have sun in abundance, and it's free. We have water, we have the wind, and these are things that provide. So in terms of the raw materials to be able to harness the potentials of the renewable energy project is already there in Africa, and the only thing that remains is the financing and putting in the relevant frameworks to be able to ensure that investors are coming in with confidence to make investments and be able to repatriate their profits.